is currently, dealing with a 7-stock portfolio. And Sudeep, given that he's got interest in the metal space, so we've seen quite a concentration on the metal basket, and also a few names where he seems to have done bottom fishing, the likes of a Kingfisher and an an ARSS Infra as well. So what do you make of the overall portfolio first up?
Well, I think, my view on the metal space is clear. I don't like that space at this stage. If you are in the business of metals, that's a different thing. But as a stock, I won't recommend remaining invested in metal stocks at this stage. The other point is on the infrastructure beaten down companies. Too much of uncertainty still continues to remain in the infra space, and companies like ARSS Infra and even IVRCL to an extent is not a recommended buy or hold at this stage. IVRCL, there was some excitement because of some corporate action and inorganic possibilities, but that has fizzled out. So at this stage, I won't like to hold the small cap stocks which our investor is holding. However, the large cap stocks which he is holding are good stocks. Both Tata Motors and Tata Steel are good holds. Tata Motor, in fact, definitely is a good buy at current level. Tata Steel, definitely he should continue holding, and maybe he can hold for some more gain from current levels.
Okay, so then let's break it down to individual stocks in his portfolio. You mentioned, Sudeep, that you're not a fan of the beaten down infrastructure names. So what should he do with 8,000 shares of IVRCL Infra purchased at 43?
Well, I think he should exit that stock. There is no point holding on to that stock at this stage. If he has to buy infra, he should move to large cap infra stocks like Reliance Infra. Maybe he should look at some other infra companies, but not the small cap infra.
Okay, and what about Sterlite then from the metals pack, 6,000 shares of that one?
Well, I have already mentioned I don't like Sterlite at current levels because of reasons that metals are going through a slowdown world over, and this issue with metals will continue with China slowing down significantly. So exit from Sterlite at current level is recommended.
And Hindustan Zinc?
Well, my view on metal continues, and I think even here he should exit. Now, I'm not saying these companies are bad, but at current levels, in the current global environment, I think it's better to exit and replace these stocks with something else.
Okay, Sudeep, so let's talk about the next bunch of stocks that he's got, and ARSS Infra, and a hefty quantity at that of that one. 80,000 shares is what he's picked up. Tata Motors, about 4,500 shares of that. Tata Steel as well as Kingfisher. Another one where he's got a hefty amount of 60,000 shares at 10 rupees 30 paise.
Well, ARSS definitely I will not like to hold in my portfolio. Yes, I can understand both ARSS and Kingfisher. He has done bottom fishing, and probably he has tried to identify a low valued stock and bought it. But I'm not very confident about either of these stocks. Whereas Tata Motors and Tata Steel, as I mentioned, are good buys. He should continue holding these stocks.
And finally, a Kingfisher.
Kingfisher is definitely not a hold or a buy at this level. There are too many uncertainties concerning this company, and I will definitely recommend that he exits. The sooner the better.
Well, you have Mr. Sangai saying that he's pretty intrigued by the ADAG pack, particularly Reliance Infrastructure. At these levels, Sudeep, given the fundamentals of the company, is this the right time to buy?
Definitely, I think Reliance Infrastructure, as I just mentioned, at current level, it is an interesting buy. I have also noticed that somewhere he mentioned that he's a long-term investor. If he's a long-term investor and he's willing to hold for some time, Reliance Infrastructure is definitely a good buy. The company has certain issues with its projects, but over a long period of time, considering the balance sheet strength, considering the number of projects it has, and considering the management quality, I would recommend a hold or a buy in case he doesn't have in Reliance Infra.
Okay, that's the word of advice coming in on the entire portfolio. Hope, Mr. Sanga, that Sudeep was able to address it for you. But do remember, for everyone that's watching, that this is only a model portfolio, and it's very important that you do consult your individual investment advisor before taking on board any investment decision.
Okay, time for us to take another quick break on the show, but come right back because on the other side, we'll be getting you 2 stock ideas from each of our experts.
The composition of the market movement is changing. You know, the earlier bellwether stocks are no more the bellwether stocks. And there are advent of new sectors, new stocks which are coming up. So I think the composition of the market movement is definitely going to change. But we do definitely believe that, you know, the downside appears to be limited.
Catch Sunil Singhania on Market Makers only on ET Now.
Watch India's first technology-based reality show that challenges IT professionals to come up with cutting-edge solutions to business problems. After a rigorous selection process, 42 of India's best techies are ready to engage in a battle of wit, intellect and business insight. Get ready to watch the brightest minds conquer real-world business challenges put forth by the leading CIOs. Presenting the Capgemini Super Techies show. Coming soon, only on ET Now.
Trading in commodities and currencies can be quite a puzzle. Should you look at commodity spot prices or should you consider commodity futures? Does it make sense to invest in dollars rise or is a volatile euro the best opportunity right now? Make the best decisions with the most informed experts, exclusives and the smartest trading ideas with Hot Commodities. Only on ET Now.
Presented by MCX.
Back with Buy Now, Sell Now Weekend right here on ET Now.
Well, after discussing your stock-specific queries as well as your portfolio that you've sent in, time to get you trading ideas for the week ahead. And Prakash, I'll go to you first. And what are the 2 top ideas that you've identified?
I like Crest animation. I like the structure near the lows, closer to around these levels of around 30, 28 zones. Structurally, I feel this is a good place. It's a make or break levels. If it has to go up, this is the only place it can go up from. On the upside, we could have a target of 35 and have a stop below 28. Crest animation seems to be a buy. And the second stock that I like is Opto Circuit. Seen a good up move from on Friday. I would say structurally looks okay. I would say that have a stop below this level of 157. On the upside, we could see targets closer to 175. Looks like a momentum has gained, and perhaps we could see some more upside in the days to come in Opto Circuit. So Crest animation and Opto Circuit seems to be looking good to me.
Okay, and those are some of the levels that you can watch out for. On Crest Animation, expect an upside target of 35. For Opto Circuits, it's a buy at current levels with a target of 175. Moving on then, and Sudeep, what are the stocks that you're recommending from a fundamental perspective?
Well, the first stock I'd like to recommend is Raymond. I think it's an excellent company. It's in the consumer space. The kind of brands Raymond has is unparalleled. It's got an excellent distribution network across the country, both owned as well as third party. The valuation at current level is very, very attractive. We are looking at a value of around rupees 450 in about 6 months' time. One more thing one must remember in Raymond is that a lot of inorganic value unlocking is happening through sale of unrelated assets which the company has. So this will be an additional kicker, and all this put together makes Raymond very attractive at current levels. The second stock which we are recommending is ICICI Bank. It's an excellent bank, very efficiently managed. Performance has improved significantly. All the key parameters, including net interest margin, NPA, gross and net, I think all the indicators are looking good. The company's this quarter results are expected to be very good, and we are looking at a price of around 1100 in the short term.
But Sudeep, with the overall market momentum, given the fact that earnings season is moving by thick and fast, you also have those worries of monsoons which continue to be lingering. So what would be your outlook for the markets now for the coming week?
Well, I think, there are, as you say, there are lots of uncertainties. I think global environment continues to be volatile. Monsoon is uncertain. But the biggest factor which the market is expecting now, and I think market was expecting towards the end of this week and is going to expect definitely next week, is policy measures which are expected from the government. Number one is definitely the diesel price increase. The number 2 and 3 will be FDI in retail and FDI in aviation. These are the measures which are being talked about, and market is expecting it. If any of these measures do come actually, then I think that should be good for the market. On the other hand, if none of these measures do take place, are executed, I think market will be disappointed, and we will see correction. We have already started seeing the trend of that from Friday itself, and I think that trend may continue of market coming down based on expectation not being met by the government. The global environment, monsoon uncertainties will continue. Expectation from RBI regarding interest rate cut and things like that will continue. But the major deciding factor will be reform measures from the government.
So, Sudeep, given that we've got the presidential elections out of the way, do you think we will see some bit of, actual decisions being taken vis-a-vis the regulated sectors, the likes of probably even the fertilizer, the sugar pack, retail and aviation, of course, you mentioned right now. What would be your approach to all these policy-governed sectors?
Well, I think, as a conservative house, we normally stay away from the speculative sectors because the speculation is concerning government measures, whether they will come or not. But having said that, I think we've been expecting for a very, very long time. While all these together may not be possible, but at least a movement towards, government starting to take action will be a positive signal for the market. Diesel price increase, I think, is a prerequisite to prevent India from getting, into a negative rating zone. And I think the timeline for that is running, and one needs to take action very, very quickly. And, if S&P or Moody's do downgrade India to junk rating, I think that will be a disaster for the markets and the economy. And government needs to take action. Everybody will be watching with bated breath whether that action do come or not.
So government action is exactly what the market seems to be hinging on. That's the view coming in on the overall markets. Thanks very much to both of our guests, and Prakash as well as Sudeep, for joining in on the show and giving us that perspective. But with that, we wrap it up right here on Buy Now Sell Now Weekend. Thanks so much for watching.
But do remember that you can tune into your favorite show on these 3 timings: on Sunday, Saturday mornings at 10 o'clock, on Sunday afternoons at 2, and Sunday evenings at 8 p.m.
India hit the gold rush this Olympics. Hero presents Quest for Gold. Get daily updates on the London 2012 Olympics from 27th July to 2nd August exclusively on ET Now.
Presented by Hero, Hum Mein Hai Hero.
The history of the Timex brand is one that is synonymous with tradition and innovation. Presenting the Basel World 2012 Timex Group Special. A special presentation on how the Timex Group is evolving with time and keeping pace with a new young India. Only on ET Now.
Brought to you by Timex.
North American Car of the Year. Arriving soon. Book your place at the top. Hyundai.
The market environment is throwing up opportunities. also you have the other side where specialist asset managers are also mushrooming, So overall, I would say that yes, there is a move towards consolidation, but also I would say that there is also a greater specialization which we're also seeing.
Catch Sridhar Chandrasekharan in an exclusive conversation on ET Interview, only on ET Now.
The composition of the market movement is changing. The earlier bellwether stocks are no more the bellwether stocks. And there are advent of new sectors, new stocks which are coming up. So I think the composition of the market movement is definitely going